Everyone, it's Paul with Investment Tuesday. We got a packed issue of Investment Tuesday. We are going to cover gold. We are going to cover the one market that I believe most people are going to miss, or the one bull market that most people are going to miss. And we're going to tell you what that is. We're going to talk about crypto quickly, and we're going to try to get all this done in 30 minutes. So let's go. Before we do that, let's do legal disclaimers and disclosures. This video and the content from ATG Digital is not investment or financial advice. It is presented to you as my opinion, our view, our take on the world. Use it as information, engagement, or entertainment, whatever you choose to do with it. It is your responsibility because it is your money. All ATG Digital content may contain errors, oversights, mistakes. Understand that investment operations have significant risks and can lead to the loss of your principal. Investment operations means buying, selling a stock, crypto, options. Loss of your principal means losing money. I, the owners, employees, contractors of ATG Digital, we own, trade, transact in the securities that are mentioned in this video and all content from ATG Digital. We do not take money from companies or crypto sponsors, token sponsors to recommend their stocks or crypto tokens. We publish a lot of free content / research, the Substack, which goes out every market day, Spotify, podcast, Ballman Speculating. That's the name of the podcast, which goes out about once a month. And then YouTube, I'm on a regular basis. We social media, we are on X, Instagram, and Facebook. So please check us out there. Then, in case you are unaware, you can choose to join this channel, the Paul Vimpoli Guru channel. And what do you get? Well, you get early access to Investment Tuesday. You also get access to bonus videos that are recorded only for members that focus on a single investment. Could be a crypto, could be a stock. So you can check that out. Other places where you can have access to more information, more ideas, like the ones that you see on this YouTube channel, is atgdigital.media. Please make sure that you go to atgdigital.media and don't simply say, oh, well, that looks like Paul, that's purple, looks like a website. In the age of AI, everything can be cloned very, very quickly. So it is critical that you make sure you go to the correct website when you go to subscribe. Okay. Let's start with the general stock market, because a lot of the things I'm going to talk about this Investment Tuesday predicate on the idea that the big, I'll call it the big 3, maybe 2 trades, that everybody feels like they have to be in, want to be in, because they're going to miss out because it's going to be the investment of the century. I think is losing momentum, right? So let's just look at the overall stock market here, right? So in this chart, the ones to focus on, the purple line and the black line. The purple line is the NASDAQ composite. Remember, there's 2 exchanges in the United States, NASDAQ, New York Stock Exchange. All the big tech companies, they trade on the NASDAQ, right? This black line is the NASDAQ 100, which is the 100 largest companies that trade on that NASDAQ exchange, which include all the big tech companies. Of 100 companies, 10 stocks represent about 70% of the NASDAQ 100. So crazy concentration, crazy high valuations, crazy high expectations. But you know all this. I've mentioned all this to you. So was it last Friday we had this, sudden drop, right? And there's been a recovery. Nonetheless, my experience is that once you experience a drop like that, when it's accompanied by all the things that I pointed out to you last week, which is very high leverage, very high expectations, very high call option volume, and also generally very weak breadth. What does that mean? Meaning that it's a very few stocks that are carrying these market indices higher. It often indicates a shift in momentum, often indicates a break in momentum, and that the market is readying itself to move to something else. Now, many people might be wondering what that something else is, and I just realized I never showed the chart. Okay. That is the chart here. And like I said, purple and black is the places, that's the places of the most popular trades, which is AI, I'll call meme / speculative stocks, very low price stocks, which are being, organized, through social media, where people are buying these very low price stocks and just like, bidding them higher, completely unrelated to the prospects for their business or anything like that. This is just purely a social media driven pump. And then generally NASDAQ, tech stocks, right? I mean, the big, Mag 7, whatever you want to call it. Those are the big popular trades. So if you go with the idea that this is either there is a momentum shift occurring or there is a momentum break, and money will move to where, it thinks it can make money faster, because my experience over 30 years is that people really aren't chasing big money. What they really want is fast money, right? So they're always trying to find the next hot thing, especially in a market that is dominated like this one is by retail individual traders. They don't really care about fundamental analysis or all this thing. Give me the money now. That's what they're chasing. So my best guess is that many people might be thinking, well, Paul, I've been hearing a lot about gold. And let me get this re-signed. Yeah, there we go. So this is a social media post that I found on X, and it's showing people lining up in Vietnam. I mean, it says people storm shops. I mean, yeah, that does look like a little bit like storming to buy gold, which is now at about 4,300. And then I saw this post, which is from Sydney, Australia, people lining up, not storming in this case, to buy gold. I've also read that this was true in Singapore, and I'll have to check with my mom and see, if it's true in India. In other words, gold has become a social phenomenon. And so the question then really, everyone's like, should I buy it now? Should I buy it now? And I'm getting questions like that. And the other question that goes along, which is closely related, is that can it see 5,000? Can it see 10,000? Now, here's, what I would say, which is like, let's just look at gold prices, and we've got gold mining prices here. So gold prices in 2025 year to date are up almost 65%, which, folks, if you haven't been in gold for a while, that's just an extraordinary number, right? I've been tracking gold for 25 years plus. That's a very big gain, right? So that's the gold line here. That's so 65%. Gold mining stocks, I don't know if they've peaked out for this move yet, but we're up almost 150%. So coming back to the question, should you buy gold now? Can it go to 5,000? Can it go to 10,000? I will give you I'll give a probability, because nobody knows the answer. I'll say, given that it's a bit of a social phenomenon and it's being spread by social media, TikTok videos, all these things, I'll say 30-40% chance it can make it to 5,000. So that's a move from 4,300 to 5,000. But the question really is for someone, let's say, that's buying not for like a trade, right? I mean, if you're buying for 1 to 3 years with the idea like, hey, this is going to keep rising at this rate for, I don't know, the next 3 years, I'll say for that is a very low likelihood. What am I saying? In the end, like, this is our, when you see social media posts of people lining up, this is not a good sign, right? It suggests that the crowd is in the trade. The crowd tends to come late. Generally, they're not the best investors. So, my general view is that when I see social media posts like that, the price can go higher, but generally I would want to be potentially a seller if I had a lot of gold, or if I had, a little bit of gold. I didn't worry about like, well, my little amount of gold is going to turn the market. I might just, be like, yeah, it's gone up a lot. I'm a holder here. I'm not a buyer. And the same thing would apply to the gold miner stocks as well, which is that if gold were to rise to 5,000, I don't know, 5,500, whatever, it would take the miners up with it. But these are prices at which I'm talking about gold. Like, you got to put up $4,000, $5,000, to buy gold. It's going to run out of buyers because of the amount of money it's going to take to buy it. And with that, you will see selling begin. And then to the extent that there is leverage, to the extent that people have extended themselves, then you'll see the usual cascade. So you'll have to, it, like many things in investing, it depends on your time frame. It depends on your risk tolerance and your end goals. I mean, for very fast traders, that know what they're doing, yeah, there may be some upside. But I would say, for the time frames we look at with ATG Digital, which is, I'll say minimum 1 to 3 years or more, we would not be buyers here. Almost certainly, we're going to see some tailing off in gold's performance. Usually, that'll, on the short side, I'll say 6-9 months. On the longer side, might be, I don't know, 1 or 2 years, something like that. Because why? Well, there's so many people that have rushed in, and then, when the momentum ends, the same number of people will look to rush out, and that selling will take on its own life. And until that selling can be cleared, you can't get a new bull market going again. But for now, is going up. I can't tell for sure. Like I said, I'll give 5,000 a 30% chance. I would give 10,000 a maybe 5%, 10% chance. We will continue to own our gold mining stocks and absorb the volatility, because I do think that in the long term, gold prices will continue to go higher. But, no bull market is just like a straight line. I mean, we might want it to be, but it is not. Okay, and we can do similar analysis for gold's friend, which is silver. And you will see silver prices are up about 70%. Silver did make a new all-time nominal high. In other words, not adjusted for inflation. Silver miners is an ETF. They were up about 120%. Could silver also continue to make, if gold goes up to 5,000, it'll probably carry silver with it. So it's the same analysis. We've got, a lot of speculative fervor, frenzy now in gold mining, in silver mining stocks. It could go higher. However, demand supply analysis, market psychology, investor behavior tells you that a near term or even intermediate top is somewhere, coming. And from here, unless you are a nimble trader and with very short time horizons, I would be careful about buying. I would be careful about buying, stocks that have, just ripped and ripped and ripped higher, right? Okay, so, people might say, well, Paul, what kind of advice is that? Well, hey, I give you my view. You have to take into account, what your risk parameters are, what your time frames are, how much you want to risk, and what you want to choose to do, and make decisions. We provide information. What are better bets from my perspective? In other words, let's just say, gold, goes for a little bit, but then the sell-off ensues. And, there's no market in which something just goes up endlessly. So, a sell-off is coming somewhere, let's say in the next 3 months. Why? Well, I mean, you can bet that a bunch of hedge funds have rushed into gold, etc. And, the end of the year is coming. Performance means that, they got to cash out. They can't risk those gains. So there are plenty of catalysts to suggest why things can shift, in momentum, both for stocks, right, and for gold and silver, which, have become a hot trade. So like last week, I will say that in my opinion and in my judgment, a better place for money is energy, oil, and in particular, oil services. All right. What are oil services? Well, they have those like big offshore rigs. Also have rigs onshore. Those businesses are very levered to the price of oil. And when oil prices are low, there are a lot of smaller oil and energy companies that will simply stop using their rigs, and so that really affects the prices of rigs and also affects what's called utilization. In other words, how many are being used. And if they're not being used and you're one of these companies that own these rigs, well, I mean, hey, that asset is just sitting there, not earning money. and you've paid, a lot of money for it. It's not being used. You're not earning anything. So that's no good. However, if prices start to move higher and where the market thinks, hey, well, low prices have caused supply to be extinguished from the market, and there is, going to be somewhere out in the future higher prices driven by scarcity, these oil services stocks just tend to rip higher. Right? This is my experience from having been in the market. So we added our very first oil services stock to Diamond Tier. I believe it was on Friday. We'll look for more enormous leverage relative to the oil price, right? And before I get into why, I was also going to say this is true as well for natural gas stocks, which, again, natural gas prices, even though, people seem to be wanting or desperately wanting a recession, et cetera, there's really no sign of that. What there is a real sign of is that there is the potential for a cyclical recovery across, I'll say, the United States, Western Europe, and Japan, which would cause huge increase in natural gas from what I'll call, regular demand. Like setting aside AI, just the regular economy requires a lot of energy, right? I mean, and natural gas is what's called a feedstock for chemicals and fertilizer and all of these different things. So just regular demand would rip this higher. Then you add in AI and the new demands for energy from AI. Yeah, I mean, natural gas stocks, just like these oil services stocks, could really rip higher. And we have across ATG Digital, across silver tier, gold tier, diamond tier, we've got that AI energy category. So that would be mostly natural gas. And then if you're looking for, again, oil, we have a bunch of oil stocks, and now we're adding oil services stocks. So check those out. All right. Getting back to what I was saying, which is that we have lots of oil stocks. We have a specific kind of oil stock, Canadian oil sands stock, which have a particular leverage to oil prices, which is that they don't really explore for oil. Oil is in the sands, but that's for another video. Let's keep moving here as to why, in my judgment, we want to be in oil. Well, if you look at what is happening in the world, right? You've got the Russia-Ukraine war going on, and President Trump is desperately trying to have this war end. And then one of the sort of sticking points, the war, is that Russia continues to be able to fund itself by selling oil to India, to China, to many places in Asia. And if President Trump can get India, which is the most likely to stop buying from Russia, there's the potential for oil prices to go significantly higher, because Russia still represents somewhere in the range of, I'd say on the low side 15%, on the high side 30% of all oil supply, right? So if they disappeared, right, as a supplier, what would replace it? Well, OPEC, Saudi Arabia, et cetera. I mean, they've been cutting production because that's something they naturally do as prices go down. And as I showed you here, this is a price chart of oil for 5 years. And you can see this is like when oil prices went negative during COVID, if you remember that. And we are essentially back to, where we were right before COVID, except that, the world conditions have changed. Interest rates are now going down. Economies like the United States, Europe, Japan are looking to stimulate their economies. And oil does not reflect that. Generally, when you have a cyclical upturn in the economy, demand for oil goes up. So current prices reflect a very pessimistic outlook, but that's the nature of markets. Like, like something I say to subscribers, which is like, Prices are low when the news is bad. That's the nature of it. I mean, the markets discount that, right? So I would say if you're looking for the place, where, I believe the market action is going to be 6, 12 months from now, energy, in my opinion, is one of the places. All right, going back to oil, like I said, one of the sticking points for the Russia-Ukraine war to end is that the pain point for Russia is that, like, if they can keep getting funding from oil, they can keep going in this war. So President Trump is focusing on the buyers that are most likely to be like, okay, we will maybe buy less, maybe stop buying. And Japan, along with India, represent the two places where that's most likely. Another sign to me that oil is setting up for a reversal is, remember I showed you in that chart, oil services companies. Now, this is one of the largest oil services companies in the world, and to the market's surprise, they reported higher than expected earnings. So generally, when oil prices are low, that is not something you would expect, because most people are like, well, okay, why should I go and pay for, all these oil services contracts, etc., if the prices are going down, unless you think that, hey, prices are about to set up to go higher, and hey, you want to get in front of, that demand, because once prices go higher, the lease rates for all of these rigs and things like that, they rocket higher. So you would get in early. And so this is a sign that things are beginning to shift. Another thing that I talked about last week, which is that it turns out that the forecast from the IEA, which is the International Energy Agency, and other international agencies, it turns out that their forecasts were ideological, driven by, I guess, political influence to say, hey, we want the forecast to say that we don't need oil, we don't need fossil fuels, and so please make your forecast say that. Now the International Energy Agency is saying, well, hey, you know what? No, actually, we're going to change our mind. We actually need a ton of oil and a ton of oil and gas. So bottom line is that there is like this short-term potential for this reversal driven by geopolitics. Longer term, we just have not been drilling for oil or natural gas for the better part of, I'll say, 2 decades. And so into a cyclical recovery, into a potential, geopolitical problem, there's not going to be enough. And in that scenario, what you will see is anything with exposure to oil and gas rocket higher. The last one, many people will say like, hey, Paul, well, I don't know, if you have all your facts right. And I'll say this is investor psychology, if you will. And from having been around for 30 years in this business, which is that people tend to make the most bearish forecasts, in a bear market, right? I mean, after the prices collapsed 70%, people will be like, it can go down 75%. In other words, another 5%. So stories like this generally show up somewhere at, near, around bottom. All right. I mean, which is that, the price drives psychology. Like, people are afraid, like, you don't want to look like a fool. The crowd is all saying, look, oil prices are low, there's a glut, except markets discount that. And, so I look at this and be like, yeah, that looks like the kind of news story, the kind of call that is made at, near, around bottom. So for me, that's a contrarian indicator, and a positive sign for me. Let's then quickly just go into why natural gas, which the potential for that to go up is significant. It's it's trading at like $3. It could go, I mean, when there is big economic growth, it's trades for $8, $10, $12. So what's driving that? Well, I talked about the fact that a general cyclical recovery, we need a lot of energy, and the default for many countries, particularly the United States, for all sorts of industrial uses is natural gas. So, I mean, that's not even counting AI. But then there's, the AI trend, right? Which requires a lot of natural gas based utilities, electricity, power plants to be bid up. Yeah, that is not accounted for in the natural gas price that you are seeing today. So that is another place where I would be looking to put our money. And if you're at ATG Digital, just go. If you're in silver tier or gold tier, you'll see AI, and then it says electricity. Those are all pretty much stocks that benefit from natural gas. Okay, shutting down a lot of tabs so I don't freeze again. Let me talk about the last place where I would be looking to put my money given a momentum shift break that, in my opinion, is going on. All right, we went through gold and be like, well, that might be a very short-term alternative. Oil and gas, yeah, I mean, that's for the 1 to 3 years. It's not like, it's not, those things aren't flying higher today. But again, in hindsight, 6 months, 12 months from now, you'll be like, oh, I wish I bought them when they were low and cheap. So what's the next place where we can go to where we might say this? I think one of the places is crypto. So what's on this chart? What's on this chart is gold, which is in gold color, and then we've got silver, which is in gray color, and then we've got Bitcoin in orange and Ethereum in purple. And then the red line is short-term interest rates, which you can count as the rate that the Federal Reserve controls. All right. I mean, remember, the Federal Reserve controls only one rate. It is a very short-term rate. It is the rate for lending to banks. It does not control the interest rate on the 30-year bond, does not control on the 10-year bond, the 5-year bond, only this very short-term rate. But it is a very influential rate that has massive market power around the world. So while it's one rate, it's very influential. And when this rate is going down, generally it means that there is going to be more money issuance, more money printing. All right, there's going to be more liquidity. And that is what gold and silver have been responding to, which is that previously we used to have a threshold or a benchmark or hurdle for inflation, which was 2%, which said, hey, if inflation is about 2%, the central bank will not cut interest rates. But we have thrown that away. And now it's some moving target. Maybe it's 3, maybe it's 4. But it's no longer 2%. And so that's what gold and silver have been responding to. With gold now bid up, with silver now bid up, and then, to some extent, people have been, the same sort of thing that people have been doing with gold and silver was what people have been doing with NASDAQ stocks. They're using that as a store of value. With all of these bid up, one of the things that doesn't look bid up relative to all these things is top tier crypto. Now, I've been saying this for a few months. However, it only takes a couple of months of performance, for people like, oh yeah, I wish I bought it, when they were lower. But given a momentum break in NASDAQ, AI, tech, if you will, gold starting to look peaky, toppy, short term. Long term, I still think it's bull market. The same thing for silver. Where will money go to? Yeah, I mean, having gone through this horrendous, 18%, just smash in Bitcoin, which has just like destroyed, all the altcoins, etc. I don't know. It looks pretty good for a sort of like a counter trend rally, which, I think most people have started to really give up on crypto. It has just been so disappointing relative to expectations. Based on previous cycles, we should have been hitting all-time highs. The cycle highs should be happening about now, like between now and the, let's say early December, like based on past cycles. So many people are probably going to be like, yeah, this cycle is like a bust. It's gone. It's over. And so all those people will be exiting out and gone. And then Yeah, I think the cycle is going to shock and surprise people by just how long it runs. I think it's going to go into kind of like somewhere between June and September of next year, where all this money from NASDAQ, tech, AI, speculative, gold, silver, like where can we go where prices can be pushed higher with liquidity? I think the game is going to be crypto. So I will say crypto is the last place that I would be looking for if I was looking to put some money to work. All right, that is Investment Tuesday for today. If you are a member, look out for the bonus video, which will be on the channel sometime on, I think, Monday, maybe Tuesday. All right, thanks for attending Investment Tuesday. This is Paul saying goodbye.